Hey everyone, welcome back to Corporate Decoder. Today we are diving into a report that's cleaner than most financial filings, at least that's what FuelCell Energy hopes. We'll see if their promises of clean energy translate to a healthy bottom line. FuelCell Energy just dropped their latest quarterly report, and it's time to see what's cooking in the world of clean energy. This Form 10Q covers their performance up to January of 2025, giving us a snapshot of how they're doing recently. First off, it's worth noting that FuelCell Energy has just over 21 million shares of common stock outstanding. This is important context for understanding things like earnings per share. Let's jump into the financials. FuelCell's balance sheet gives us a good overview of what the company owns and owes. They've got about $98 million in unrestricted cash. That sounds like a decent amount, but it's down from $148 million last year. That decrease in cash is something to keep an eye on. Their total assets stand at $907 million, but here's a significant detail tucked away in the footnotes. About $317 million of those assets are tied up in what are called variable interest entities, which can only be used to settle specific debts. That limits FuelCell's flexibility a bit. On the other side, their total liabilities are around $202 million. Then there's a slightly unusual item, the redeemable Series B preferred stock at almost $60 million. This isn't straight-up debt, but it acts a bit like it because it has a liquidation preference. Now let's talk about how FuelCell Energy is performing. Their total revenues for the quarter are around $19 million. But it cost them $24 million to generate that revenue, resulting in a gross loss. Ouch. And then comes the operating expenses. Administration, selling, research, development. There was also a restructuring expense of $1.5 million. That kind of expense indicates that the company was trying to cut costs, laying off people. Deducting expenses and accounting for interest leads to a net loss for the quarter of around $32 million. Broken down, this loss comes out to $1.42 per share. That's quite a bit of red ink. Taking into account a few other financial adjustments, the total comprehensive loss comes to over $28 million. Cash flow statements tell us exactly where the money is going and coming from, which is even more insightful. They burned over $45 million in operating activities. And they used another $7 million in investing activities, but they also raised almost $5 million through financing activities. All told, their cash equivalents, and restricted cash decreased by over $48 million during the quarter. That highlights the pressure on their cash reserves. Diving into the notes, there is something interesting going on with recent accounting pronouncements. The unaudited consolidated financial statements have been prepared in accordance with the rules and regulations of the SEC regarding interim financial information. The financial reports also consolidates all the smaller entities they have a large financial control over. As of late 2023, the Toyota project's credit sale resulted in a revenue cut in subsequent periods. A large fuel sale to a single customer took place at the start of 2025. FuelCell has also benefited from tax credits and partnerships. Another note sheds light on FuelCell's recent restructuring, which led to a workforce reduction. Restructuring actions took place during the period. There are also still some amounts to be paid relating to the cost cutting. Lastly, the section on liquidity points out they expect to continue to burn cash. It hinges on project completion, operational performance, obtaining new financing, and successfully launching their new technology. If these don't pan out, they might have to cut back even more. We can see from the accounting pronouncements note that there are some changes on the horizon, but they shouldn't impact the overall results too much other than needing to provide some enhanced disclosures in the future. MMHE signed a joint agreement. There was another joint agreement. There was mine safety disclosure. Then it follows standard information, legal proceedings, defaults, mine safety, and other information. And finally, the signatures. Now, stepping back and looking at the bigger picture, FuelCell Energy is definitely at a crossroads. FuelCell has made strong moves into emerging markets, which is key to long-term success. New projects in new markets means new revenue that is yet to be seen. However, their near-term financials aren't pretty. They're burning through cash quickly, and the losses per share are significant. Plus, relying on future financing and the successful commercialization of new technologies is risky. The success of these all rely on successful commercialization, which itself is not cheap. The need to scale their production will make or break them. Cost reduction is the name of the game because currently the cost of revenue is more than the revenue itself. Ultimately, FuelCell Energy has potential, but they need to prove they can turn that potential into profit. Right now, it's a high-risk, high-reward situation. We give it a C. Thanks for watching. If you found this helpful, please subscribe, like, and comment. What do you think of the company and this report? Please feel free to share in the comments.